Ladies and gentlemen, good day and welcome to the 3Q FY23 Minda Corporation Limited conference call hosted by Nirmal Bang Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Varun Bakshi from Nirmal Bang Equities. Thank you, and over to you, sir.
Thank you. On behalf of Nirmal Bang Institutional Equities, I thank you all for joining this call. I also thank management for providing us the opportunity to host this call. I now hand over the call to Ms. Pushpa Mani for introducing the management and take it from there. Over to you, Pushpa.
Hi, good afternoon, everybody. This is Akash Minda this side. I would request our Group Chairman, Mr. Ashok Minda, to give us the opening remarks. Thank you.
Thank you, Akash. Good evening, everyone, and welcome to the Q3 Financial Year 23 Earnings Conference Call of Minda Corporation. I would like to thank you all for joining us on this conference call here today and hope you all are keeping safe and healthy. The auto industry saw a steady growth on year-on-year basis in the third quarter of financial year 23, and the growth is visible across vehicle segments. Supply side constraint seems to be easing out with better semiconductor situation, but uncertainty and long lead time still continues, which is likely to persist until the end of financial year 23. Export saw an improving trend, but situation yet to be normalized on the back of certain macroeconomic factors. Among the headwinds and the tailwinds, I am pleased to report that Minda Corporation has continued its growth momentum with revenue growth faster than the industry and double-digit EBITDA margin for 10th straight quarters. The company's revenue from operation stood at rupees 1,068 crores, registering a growth of 45% year-on-year and 22% on like-to-like basis, excluding Minda Instrument, with EBITDA margin of 10.7%. PAT for the quarter stood at rupees 52 crores, with PAT margin of 4.9%. The growth was driven by better revenue visibility in both business verticals, improving product mix, increasing content per vehicle, and increasing in share of business. In line with our philosophy to reward our shareholders, the Board of Directors have declared an interim dividend of 20% on the face value, which is rupees 40 per equity share. Now, I would like to take you all through the key development during the quarter. The company entered into technology license agreement with Luconav for telematic software for both web and Android iOS platforms. Minda Corporation is already providing telematic hardware kit, and with the addition of software capabilities, we have become a complete system solution provider in telematics. The company has filed 5 patents during the quarter in various business verticals, taking the total number of patents to 229. We have inaugurated one of more state-of-the-art wiring harness plant in Chakan, Pune. This plant is spread across 190,000 square feet, and the factory is equipped with advanced machine backed by cutting-edge technology. Successful EV launches by key OEMs like Tata, Hyundai, Mahindra, Bajaj, Honda, etc. were clear signs of EV transformation on the ground, and we at Minda Corporation are all set to capture the fast-growing EV space with products like Smart Key, DC-DC converter, battery chargers, IPS, and telematics. 9-month financial year 23, EV order constitutes 24% of the total order book by Minda Corporation. We are focused to solidify our market leadership by providing high quality, innovative products and securing new business in our core products, including lock sets, wiring harness, instrument clusters, and sensors. Moreover, all our products are undergoing premiumization, resulting in increased content value. Moving forward, our strategy will be to continue to strengthen our core products and expand our customer base by onboarding new customers and increasing share of business with existing customers. We would be targeting this through in-house R&D, implementing technological upgrades, and forming strategic partnership globally. It is important to emphasize that Minda Corporation remains dedicated to understanding customer needs and integrating advanced technology into its products for quality and sustainability purposes. With this, I would like to hand over to Mr. Akash Minda for a brief overview of the earnings presentation. Over to you, Akash.
Thank you, sir. I would request all of you to refer to the slides posted online for the earnings presentation quarter 3. I thank Mr. Bakshi for Nirmal Bang for organizing this call. I refer to page 3 to share about the organization. Minda Corporation is about a 3,500 crore company with 16,000 people and 34 plants, having 9 partnerships across various products and technologies. Moving on to the next slide. We have again 34 plants, and primarily the focus is the operations in India and Asian countries. I move to slide 5, which is showing the highlights of quarter 3 and 9 months performance. Continued growth momentum with revenue growing faster than the market growth. Double-digit EBITDA margin for the 10th straight quarter on sequential basis. PAT stood at 52 crores with a PAT margin of 5% in quarter 3. Secured marquee orders of wiring harness for EV platform of a Southeast Asian OEM. Order wins across various segments, with EV constituting to about 24% of the orders received in the first 9 months. Loconav for telematics solutions, software solutions, becoming a complete system provider in telematics. I now move to the next slide, where we show the consistent and sustainable market-beating performance, profitable growth by Minda Corporation. As a revenue in quarter 3, Minda Corporation has done a 1,068 crores, which is year-on-year 45% growth, which is consistent and sustainable market-beating growth. The EBITDA stood at 10.7% and at 114 crores, which is again 45% growth from last year. PAT at about 4.9% at 52 crores. Moving to the next slide. This is a snapshot about the Minda Corporation Limited, which shows all the products, the key customers. The green customers are EV customers, manufacturing facilities and R&D capabilities. On the right, it shows about the number of shareholders and other shareholdings. Moving to the next slide, sharing about the Indian automotive industry performance. If I compare 9-month year-on-year growth, the industry grew by about 16.3%, wherein two-wheelers grew by 13%, passenger vehicle by 30%, tractors by 5%, and CV by about 40%. If I talk about the year-on-year growth for quarter 3, the industry grew by about 4.6%, where two-wheelers growth was pretty much flat, and the passenger vehicle grew by 21%, and tractors grew by about 6%. On a quarter-on-quarter basis, the industry degrew by about 17%, two-wheeler degrew by about 18%, passenger vehicle by 10.5%, commercial vehicles and tractors by a large number of 26%. Quarter 3 FY23 saw strong demand in PV segment with new launches. The weakness in rural demand continues on the back of uneven monsoon, tepid rural sentiments, and increased financial costs. Going forward, the industry growth to be led by continued spend on infrastructure, improved fleet utilization and profitability, a strong order book aided by a slew of new launches. The premiumization trend in the two-wheeler and other segments is anticipated to continue in the near term. Overall industry growth in Q3 is 4.6% compared to last year. We remain cautiously optimistic on the auto industry on the back of strong cues in demand from domestic markets, while export remains challenging on the slack of ongoing global headwinds. I move to the next slide, which is the revenue breakup for Minda Corporation. By geography, industrial continues to be about 45%. By end market, two-wheeler continues to be about 45% of the group revenue, where commercial vehicle is about 30%, passenger vehicle is about 15%, and aftermarket is about 12%. By business vertical, mechatronics and aftermarket are about 47%. Information and connecting systems, which is primarily wiring harness, is about 37%. And Minda Instruments Limited, which is a cluster and sensors division, is about 16%. Moving to the next slide, which is the division-wise revenue. If I look at the left pie chart, the lockside or security divisions contribute about 28% of the top line, wiring harness about 28%, clusters about 10%, and die casting about 16%, and others contribute about 17%. Minda Corporation is the market leader in two-wheeler locking systems and wiring harness businesses. We are pioneer in keyless entry solutions for two-wheeler, better control over quality in lock sets with our own die casting division. Moving from mechanical cluster to incorporated latest TFT digital clusters, the company is one of the key players in the two-wheeler and CV segments and operate entering in the PV segments. In die casting division, we focus on niche products with more exports. Moving to the next slide on the consolidated performance of Q3 and 9 months. On Q3, we did an operating revenue of 1,068 crores, which is 45% increase year-on-year basis. If I include Minda Instruments, which is as is, we grew by 22%. EBITDA margin stood at 10.7% at 114 crores, which is 45% higher than last year. PBT stood at 72 crores, which is growth of 44% year-on-year, and PAT margin stood at 52 crores a year-on-year, 41% increase. On a 9-month level, we have grown from 2,028 crores to 3,226 crores. At EBITDA level, we have moved from 9.2 to 10.7%, which is from 187 crores to 345 crores in 9-month EBITDA. PBT has grown by 100% from 111 crores to 222 crores. And profit PAT has grown by about, again, 195% from 83 crores to 163 crores. On the domestic front, new business across segments further aided by new product launches and increasing share of business with existing customers. Exports are showing signs of revival while remaining cautiously optimistic on the same going forward. On the EBITDA front, we delivered double-digit margin on the back of various cost control initiatives and increased efficiency. Semiconductor supplies have eased out, but long lead time still continues. Commodity prices are softening and are almost stable on quarter-to-quarter basis, but on year-on-year basis they are increased. Moving on to the next slide, which is slide 12 on the business vertical-wise performance. I first focus on the mechatronics division. The top line is at 547 crores with 13.8% margin. This is in the same band, which is about 14%. The growth in revenue was supported by strong demand in domestic market, increase in business with some of the new launches. Exports have risen on quarter-on-quarter and year-on-year basis on the back of new orders. EBITDA margin increased by 80 basis points on the back of higher sales. On the information and connection systems, now this includes wiring harness and Minda Instruments Limited. The EBITDA margin stood at 7.4%. We understand and we acknowledge that the wiring harness division continues to perform below its potential. The growth in revenue was supported by strong demand in domestic market. Export is focused for the wiring harness division. EBITDA margin is also increased on the wiring harness division on quarter-to-quarter basis. Moving on to the next slide of partnership with Loconav. Minda Corporation used to offer hardware solutions, but now with Loconav, which will give us the software solutions. We now offer a complete system solution as in our business plan to offer system solutions to all our customers. On the next slide, we show our plants, our growing facilities, and also consolidating multiple plants into large facilities to get better economies of scale and to become close to the customer. Moving to the next slide, which is the strategic pillars of growth. So our 4 strategic pillars of growth are focused on enhancing on the core, innovation, technology, growing EV opportunity, and strengthening passenger vehicle OEM. We want to transform and become the complete solution provider and partner of choice. Cost leadership in manufacturing and thought leadership position in technology. There's a premiumization happening in the market, which Minda Corporation is acquiring. And all product innovation in all business segments will drive this content per vehicle from Minda Corporation. We want to deliver the better results than the industry and continue to outperform the market. On the next slide, we just show how the technology and the products of Minda Corporation are moving. So vehicle access, if you see the traditional locking key are moving to smart and intelligent vehicle access, which includes passive entry, passive start, flush door handles, power lift gate systems, cyber security. In the wiring harness will continue more into the vehicle architecture of power distribution unit, battery distribution unit, high voltage wiring harnesses, smart junction boxes, etc. In the clusters and sensors division, which is a driver information system, the analog cluster moving to all digital clusters, which are all TFT as explained before, with integrated telematics and ADAS systems. In the EV area, we're looking at more lightweighting as well as offering more electronic content through our internal and collaborative approach of partnership and offering new products in areas of motor and motor controller, power electronics. Moving to the next slide. This is the kit value offering on the two-wheeler EV content. Minda Corporation offers about 16 to 20,000 potential EV kit value. Our current kit value offering in the legacy or the IC is about 4 to 5,000. With the premiumization of all the products, Minda Corporation will almost double its content, and additional products in the EV product lines like DC-DC converter, battery charger, and other power electronics will get us more kit value of 8 to 10,000 rupees. Last but not the least, value propositions. So Minda Corporation would like to grow ahead of the market and deliver the customer the best of the solutions. Last but not the least, I will move on to the ESG, CSR and awards. Minda Corporation values ESG as paramount, and this is directed and even governed by our board of directors and monitored on a regular basis. More details can be looked on our website. On the corporate social responsibility in Q3, we have set up various camps all across India and overseas for focusing on education, women hygiene, and people with disabilities. In Q3, your company has received many customer awards, which shows confidence that the customers bestow on Minda Corporation Limited. We were awarded a total of 57 external awards in the Q3 across various forums. With this, I would like to conclude my presentation and invite everybody for questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Vishal from Swan Investments. Please go ahead.
Thank you for taking my question, sir, and congrats on decent set of numbers. Sir, there are actually 2-3 questions from my side. Sir, if you see last 2-3 quarters, your employee cost trajectory has gone up. So it was, last year around 115 to 120 odd crores, which has gone up now to 145, so 155, 157 crores. So Is there something you want to highlight here?
Yes, Vishal, thank you for your question. Of course, there are some of the minimum wages of various states that have been increased, leading to higher wages in the southern states per se. And of course, sorry, come again?
Last year, MIL was not there.
Yes, so last year, Minda Instruments Limited was also not there in these numbers. So Minda Instruments Limited has also now been added, which has a higher manpower as well.
Okay, sir. Sir, also can you give me the number of total debt broken into long-term and short-term debt for this as of December ending?
Yes, the total debt is about 413 crores, out of which long-term is about 95 and short-term loan is about 322. Over the last quarter, this has come down by about 35 crores.
Okay. And was there any improvement in the working capital cycle this quarter?
Yes, there have been marginal improvements in this quarter based on our various initiatives that we've taken on working capital.
Okay. Sir, I don't know, I have missed this part. What is the outlook regarding, your understanding on the two-wheeler business going forward for the next quarter and for next year? That is my last question, sir.
So if your question is on the outlook of the industry, definitely quarter 4 historically is usually a better quarter than others. But overall, the past trend in the last few quarters of two-wheelers have not been that encouraging. So we expect around a flattish growth for the two-wheeler industry, particularly going forward.
Okay. And sir, just one more question to add on. Sir, our information and connected services business has seen a drop quarter and quarter from 616 odd crores to 522 crores. So is it because of the softness in the two-wheeler demand quarter on quarter? Is my understanding right?
No, so there are 2-3 factors on this. One, in the last quarter, in the Minda Instruments Limited, there was a premium purchase of about 30 odd crores. So this quarter that is not there, so hence that 30 odd crores has come down, number one. Number two, the 65 odd crores has come down due to rather in line with the two-wheeler industry also coming down with the same percentage. So our numbers have also come down, our top line has come down in the same ratio that the two-wheeler industry has performed.
Okay. Thank you so much, sir. Thank you and all the best, sir.
Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Anil Kumar from Jefferies Securities. Please go ahead.
Hi. Congratulations for a wonderful performance. And I have a couple of questions. The first question is regarding your plans for your future product portfolio as EV scale-up happens. And do you have any plans for any inorganic growth?
So, Mr. Anil, all of our product lines are EV agnostic. When the EV or even IC is happening, there's a premiumization in the market happening, which is what Minda Corporation is acquiring and playing on. All of our product lines, like you see the keyless solutions, are going to go through premiumization. Lock and key will go to keyless. The analog clusters will go to mechanical with 2 TFT clusters. Wiring harness will have, with regulations and EV, have more content. Of course, in the electronic EV space, there is such as the DC-DC converters, battery chargers, and other PDU, BDUs, as I've explained, are going to be part of the portfolio. So we have a clear strategy of 3x3x3 in our EV product area on which segments we would like to target, what product lines we are looking at, and what is the expertise we would like to build, both organically and through partnerships.
Okay, thank you. And the next question is on what are your plans regarding leveraging China plus trend that we are seeing in the manufacturing sector? Are you doing anything significant, or do you have any specific plans?
So we do continue to explore the opportunities. Definitely, we can see a shift from the export order side. So the customers who have been rather exporting or rather importing from China are moving on to India, and which is where we're capturing some of the opportunity. As you can see, our exports have also grown year on year and quarter on quarter across all divisions, and this is where the biggest opportunity lies.
That's all from my side. Congratulations and all the best.
Thank you, Anil.
Thank you. We have the next question from the line of Arihant Sharma from Infinity Capital. Please go ahead.
Yeah, good evening, sir, and thanks for allowing me. My first question is related to which key geographies are you exporting to? Can you just tell that?
Yeah, our major or most of our exports are to Europe.
Okay. And any other region?
Yes, we are also exporting to America. We are also exporting to Latin America and Southeast Asian countries also.
Okay. And my second question is, how was the competitive intensity in quarter 3 in the key business verticals of mechatronics and wiring harness?
Sorry, can you repeat the question, please?
How was the competitive intensity in this quarter related to the key business verticals?
You mean by competition or you mean something else?
Yeah, competition. Yeah.
So definitely the competition, is not there when it comes to the keyless solutions, as I've already explained before. We are the only company who's offering the keyless solutions. Of course, competition will follow. But all the RFQs, 100% RFQs are being won for the keyless solutions on the premiumization. On the clusters and sensors, there are, of course, various competition. It's a cutthroat competition, very honestly. Yes, but we're winning orders all across, whether it's EV and IC, and across all segments. Also gaining share of business as well as cross-selling and increasing penetration over new customers as well.
Okay. Thank you. That's all from my side, and all the best for the coming quarters.
Thank you, Aaron.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. To ask a question, you may enter star and 1. We have the next question from the line of Sachin from UTI. Please go ahead.
Hi, sir.
Hi, Sachin.
Hello. Hi. Sir, just one, two questions from my side. Maybe your comments on wiring harness. I know you commented on this competitive intensity, but especially post BS6, is there any loss of market share for us? If you can give some color there. And second question is also related to this, which is to do with the indigenization of component and how much margin improvement do you see over next couple of few quarters? Thank you.
Yes, Sachin, thank you for the question. Yes, firstly, we acknowledge that the wiring harness division continues to perform below our expectations and below the potential that it has. We are working on it on multiple fronts. If I first to share with you that from BS4 to BS6, there has been a content increase, and going forward, there will be also a further content increase in tractors from TREM 4 to TREM 5, and also electric vehicle mobility. We are doing various actions and initiatives focusing on internally. If you see a few quarters back, there was concern in terms of the raw material fluctuation. So we have addressed that issue and permanently taken care of it with various strategies that we have taken from front end and back end. Secondly, on the component localization, as I've also explained before, that this is a long lead time item and issue. Currently, we are out of all components, we are sourcing about 10 to 12% internally, and going forward in the midterm to long term, this is going to go upward of 50%. And of course, the major concern or the roadblock is the lead time taken for the customer approval, as we have to put in our connection systems, and this takes approval of the complete validation of a new vehicle mobility. So these are some of the areas that we are doing. Of course, as I mentioned, we are consolidating our plants and also opening new plants to get the best infrastructure to offer the latest lines as well as the operational excellence for the wiring harness. Our current facilities are not that equipped or not that advanced, if I may say, that what they should be and what they need to be. So these are some of the areas that we are focusing on in order to increase productivity and improve profitability.
By when do you think it should come through, and if at all it happens, what's the level of improvement you think in the numbers would come through?
It will be taking about 6 to 8 quarters, just again primarily because of the lead time and time to develop. And we will see at the group level about 50 to 60 or maybe 50 to 100 basis points over the next quarters once this starts improving.
And what kind of investments do we need to put in place to modernize our facilities for this specific issue?
See, wiring harness typically is a labor-intensive product, and but now we are working across various plants and various technologies in order to automate this, which is again not done in the world, and we are exploring such advanced manufacturing excellence and production excellence activities. So I will not give you a number, but yes, it needs a significant investment in terms of upgrading our facilities and plants.
Sure. I'm just trying to understand, maybe for a 100 basis point improvement, is there any ballpark number or any IRR that will that be asset dilutive? Does it make sense for us to completely modernize? Any number, capex number that you can share us? Should make some sense.
All I can say is there has to be a horses for courses approach. So a vehicle or a four-wheeler advanced passenger vehicle wiring harness needs to be built in a particular plant, or an EV wiring harness needs to be built in a particular plant versus a tractor wiring harness. So each plant is different based on the product mix, the customers and the location. Hence, we are having various strategies to commonize them, to club them, also be close to the customer and judiciously doing capital allocation on the requirement of the new technologies and products winning that we're doing.
Sure, that's helpful. Just if time permits, maybe one more question from my side. On the new product range that we just spoke about, or we are endeavor to get into, which are, let's say, more to do with the EV or let's say a keyless entry, that products that we're talking about. What's the progress from our side? I know you've been sharing some order inflow numbers, but if you can share more color in terms of maybe the revenue numbers that we would have achieved till date at the product level and maybe client level approvals, if you can share more color there. Thank you.
So our order intake across all the products is very healthy. As I mentioned, in the first 9 months of this year, out of the 6,000 crore of order intake, about 20% is coming from the EV customers. So far in the quarter 3, we have done about 45 crores of sales with the EV customers. So in the first 9 months is about 90 odd crores, which translate to about 2 to 3%. And this is across various segments, various customers, including startups as well as large OEMs in all segments, also including exports.
Sure, that's helpful.
Thank you.
Thank you. We have the next question from the line of Abhishek from Dolat Capital. Please go ahead.
Thanks for the opportunity and congrats for the decent set of number in tough time. Sir, my few questions from the information and connected system. The company has secured large orders for the TFT cluster around rupees 2,000 crores in the passenger vehicle. So how much revenue can we expect in FY24, and what would be the EBITDA margin?
So I will not be able to share the profitability statements, But of course, the order intakes usually take about 2 years to develop, especially an advanced product like a TFT cluster. So the SOP should start in the mid-financial year 25 or next calendar year. And of course, the order intake is, you can on a thumb rule say divide by 4, that comes to an annual number.
Okay. And sir, how was the revenue performance of Minda Instruments for the 9 months basis on the top line and EBITDA?
Yes. One second. For the Minda Instruments, we have done on the 9 months about 530 crores with an EBITDA margin of about 11%.
And what is your target for the next year?
Sorry?
What is your target for the next year?
Our target is grow higher than the industry. This is primarily catering to the two-wheeler segment. So definitely getting more and more business from the electric vehicle mobility, other segments, and growth is higher than the industry numbers.
Okay. And sir, in the wiring harness business, how is the mix for two-wheeler CVs and the passenger vehicle?
So primarily about 50% comes from the two-wheeler space. About 30% comes from the commercial vehicle aspect, and the remaining comes from the four-wheeler and tractors.
So, sir, despite a strong mix in the wiring harness business, your margin is still at a 7.4 or 8%. And as you mentioned that the semiconductor prices is cooling down. And the raw material prices has also gone down. So what is the key constraint for the margin expansion?
Abhishek, I just explained the concerns and the way forward for the wiring harness division in the previous question asked. I'm happy to repeat the same, that we are doing multiple activities and actions. We have reduced the raw material fluctuation impact on the group with various internal and external strategies. And that result, I think, can be seen over the last few quarters. On the internal front, one of the most challenging and most opportunity that we have is on the localization of the components, which takes a lot of time in terms of at least 2 years for the component validation from the customers. Currently, we are using about 10 to 12% of our localized in-house made components, which is expected to go to 50% in about 6 to 8 quarters, which will eventually start to 100 basis points.
But you have already started the PCB manufacturing in-house, plus that fixed cost has gone down in this quarter. Despite we are not looking any improvement on quarter-on-quarter basis in this segment.
Sorry, I didn't understand the question. PCB is not anything to related with the wiring harness.
Okay, sir. Okay, fine, sir. And my last question on how much is the current net debt of the company, sir?
Sorry? Net debt.
Current net debt.
We are almost net debt free, so we have net debt of about 56 crores.
But if we see the differences on the interest cost plus other income, that is huge. We are paying a huge interest cost every quarter. So why we are sitting on the cash and we are not paying the debt, given that the interest cost has gone up significantly?
Sir, your voice is not clear, Abhishek. Can you repeat the question, please?
So, sir, if we see that interest cost has gone up significantly, and this is much higher than the other income, and so why don't we pay why we are sitting on the cash despite given that increase in the huge interest cost?
So yeah, I'll ask Mr. Vinay to take up this question, please.
Yes. So this needs to be seen from 2-3 different perspectives. One, that we talked about the net debt position actually, and we need to look at the cash position in our Asian business then in Minda Instrument, and then in Minda Corporation. While, yes, we have a sort of cash and bank balances at NCL level, that is a standalone level also, with the corresponding debt. But we want to keep the cash ready for any opportunity that may come in our way, actually,
So, it will see the difference.
Percentage point interest rate differential, we are okay with that.
But every quarter we are paying 6 to 7 crores arbitrage as the interest cost. And so the annual cost would be around 28-29 crores. As you said that net debt is only 50-60 crores. So in a net debt of 50-60 crores, we are paying the 25 to 28 crores kind of the interest cost. Is it the right decision of the management? It is very difficult to digest at this point when the interest cost is quite high.
No, like I mentioned that the position of cash needs to be seen at company level. Like at Asian level, in our overseas subsidiaries, we have cash balance of about 50 crore rupees or so. And we know that that needs to be repatriated efficiently. Similarly, in Minda Instrument also, we have cash balance which needs to be deployed. And therefore, the position at standalone Minda Corporation needs to be seen separately.
Okay, sir. Thanks. That's all from my side.
Yeah.
Thank you. We have the next question from the line of Mohit Khanna from Banyan Capital Advisors. Please go ahead.
Hello, sir. Good evening. I have a question regarding the EV business. So you did mention that your revenues from EV from 9 months is 90 crores. Could you also please talk about the profitability of this 90 crore of the EV business? That would be the first, and I'll come back to the second.
So Mohit, the profitability varies. Of course, the products which are under the premiumization, for example, keyless solutions have a higher profitability. Also, there may be low profitability in some of the products because still they are under startup phase and the volume, you have to still pick up. So the economies of scale have to yet come in place to see. So, but yes, overall, our intent for that every product that we win or every project that we win is to be much higher than the current profitability.
So is it fair to say that this 90 crores of revenue is earning more than the operating EBITDA margin of 10.7% that we are generating at the consolidated level?
I can't give a direct answer to that, but yes, they are in line.
Fair enough. And also, you did mention regarding the modernization of the wiring harness facility. I'm not sure if I missed that. So how many such facilities you need to, upgrade? I think in total you have around 34 facilities. That's all company-wide total. So how many of them is wiring harness and how much of them needs to be upgraded? And do you foresee any sort of loss of business while you are upgrading the facility?
No. So there are 8 facilities of wiring harness across India. And every facility has a different capacity utilization and different level of modernization, standardization, and advanced electronics and advanced production systems. We are doing 2 fronts. One, we are doing consolidation. For example, there are 4 plants in the north. We may decide that we may do it in 2 plants or continue to do 3 plants, depending on the customer requirements as well as what strategy fits best. And similarly, in the south, we have other plants as well, which we are deciding to maybe open new plants, be more closer to the customer and have advanced, because maybe there the capacity is running at about 85-90%. Hence, it is not possible to close down the lines and shift to new production facilities. So there is a multiple and mixed bag strategy that we have to apply in order to open new facilities, consolidate new facilities, and expand new facilities depending on the customer requirements and the lead times.
Fair enough. So when can we expect a little bit more firm answer on the consolidation of the facilities and upgrading? So regarding the capex, cycle, or I would say a capex plan from the company.
We have already started a new facility in Pune for wiring harness division. which is again for the West customers. We already have existing 2 facilities in Pune already, and now we will slowly maybe transfer the businesses, not all. It's not possible. The additional new businesses of, let's say, electric vehicle mobility, passenger vehicles, or advanced technologies will be coming in from this facility, sorry. And also we may duplicate some lines. So, of course, we are adapting various strategies, whether it should be our own land or our own building versus it should be lease or OPEX or whatever. So it's a different model, and I will not be able to comment on each facility as of now.
Fair enough. And just coming, last one from my side, just coming to the growth aspect. So for the fourth quarter, I believe you mentioned that you expect a flat industry growth. So what does that mean for Minda Corp? And how do we see growth, 2-3 quarters down the line? Do you expect next few quarters to be flat growth for the industry and Minda outperforming by how much percentage points?
So Mohit, again, I can't comment on the industry, but the two-wheeler aspect was about a flattish growth. Typically, quarter 4 is one of the better quarters in the entire year. As far as Minda Corporation is concerned, our single most objective is to grow higher than the industry. So if the industry is going flat, we would like to grow by 10 to 12% higher than the industry, with all respects. So we continue to focus on that, and I think we have been delivering that for last 10 quarters consistently and sustainably, and we wish to do that with all the initiatives going forward as well.
Fair enough. Thank you so much.
Thank you.
Thank you. We have the next question from the line of Jay Kale from Elara Securities. Please go ahead.
Yeah, thanks for taking the question. So my first question is regarding your smart key solution. So we understand that you've done a 90 crore revenue from the EV business. How much of that would be smart keys, and are you seeing adoption of smart keys incrementally for ICE two-wheelers as well, at least on the premium side? That is one. And secondly, within the EV two-wheelers that are sold today of the high-speed scooters, approximately how much percentage would have adopted a smart key solution, since this also entails a cost angle to it?
Hi, Jay. So out of the, let's say, quarter 3 numbers, I would say about 60% or 50 to 60% comes from the security systems, because that's one of the first products which has taken lead. Out of this, many of them is in the exports segment also. We've been exporting keyless solutions for the last 2 years, irrespective of IC and EV. Going forward, of course, there is more penetration in the IC or EV where the more premiumization is happening across all two-wheeler segments. Definitely, the higher segments will see the adaptability first, and the EV segments will see the adaptability first compared to the commuter segment. If I speak about the future per se, typically, again, as I mentioned, 4,000 to 5,000 rupees is a keyless product. Sort of a 1 lakh scooter, about 4 to 5% is typically the cost for the complete keyless solution.
Understood. What I mean to say is that out of the 70,000 EV two-wheelers, high-speed scooters that are selling per month, 70,000, how much percent would have adopted the EV solution? Since not all high-speed scooters would want to get that additional cost.
Maybe I'll answer it a little differently, Jay. The likes of the top 5 customers that are there in the EV space, such as Ola, Bajaj, TVS, Hero Electric and all, I would say about 40 to 50%. Again, that also, if you look at, for example, the bikes like Hero Electric, they are high speed but yet low cost. But if you look at Ola, they are high speed and high cost. So again, the value chain is the same, that it first penetrates in the higher segments to the likes of Ola and Vida and others, and then you will eventually probably or should see them in the likes of Hero Electric.
Fair point. Then my next question is on the wiring harness side. Just dwelling on the localization part. So we understand that right now you'll be going ahead with localization for the ICE wiring harness or the low voltage wiring harness. Going forward with EVs coming in, and which will also require some bit of high voltage wiring harness, where are we in the curve in terms of localizing them from the start itself? Because that will be a key metric to get orders for EV wiring harness as well, since high voltage wiring harness will entail a lot of cost, and unless you localize it, it might be difficult to get orders over there.
Yeah, good question, Jay. It's the same funda. Of course, because the volumes are low, hence, the industry continues to import the high voltage connection systems just because they are available at a accepted quality and accepted technology overseas. What Minda Corporation is doing both fronts, we are looking at tie-ups with the EV high voltage connectors for all segments globally, as well as we have set up our in-house shop and design center for EV component manufacturing and designing.
Understood. Thanks and all the best.
Thank you, Jay.
Thank you. We have the next question from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, I would like to know what is the capacity utilization for Q3 and 9 months FY23 for all the divisions specifically, like security solution, wire harness, die casting, electronics. If you could help me with that.
So, again, various facilities or various segments have different capacity utilizations. If I speak about security systems division, it's about 65%. Wiring harness is about 75% to 80%. Die casting divisions are about 85%. And other electronics are low, which are about 35 to 40%.
So this is for Q3, I presume, right?
Yes, it's pretty much the same throughout the year.
Oh, okay. So the 9 months number, would it change much?
Not really. It will be almost in the same line.
Okay. Fair enough. Thank you. That's all from us.
Thank you, Vignesh.
Thank you. We have the next question from the line of Rajesh Kumar from Share Giant. Please go ahead.
Thank you, sir, for taking my question. My first question is, how is your EV portfolio panning out, and which all products are under development in EV segment?
So if you see the slide that we've already posted consistently on our presentation, which is slide number 18, our kit value for the current products are about 4,000 to 5,000 rupees. The current offering is going to go to about 10,000 with the current product offerings, and additional 8,000 to 10,000 rupees for the new power electronic products that we're doing. If you look at the sheet, starting from the top right, the connected clusters, instrument keyless entry solutions, telematics, die casting, sensors, wiring harness, these products are already in our portfolio and supplying. Also, if you look at the left side, that is the DC-DC converters, battery chargers, and other PDU, BDUs are also being supplied to the customers already in mass production. And under development are about other 4 product lines which we are working on organically and through partners.
Okay, sir. Thank you, sir, for the clarity. My next question is, on your PV segment sales has been in the range of 13 to 14%. Is there a plan to grow your PV sales?
Yes. We would like to definitely grow our PV sales as for all the right reasons. We are adding consistently new product lines as well as making breakthrough in our products to the 4-wheeler OEMs. For example, instrument clusters. We've now got, in last 2 quarters ago, we got a big breakthrough in the 4-wheeler passenger vehicle cluster space. All our sensors, for example, are now being, focusing on cross-selling as well as offering different customers. We've added new product lines such as the shark fin antenna with our joint venture. We are offering new product lines with ADAS solutions with our partner from Korea. Minda Vast continues to focus on the order book solutions for the vehicle access product lines in the 4-wheeler vehicle access space. Having said all of this, definitely this jump of 14% to about 30-40 will not happen tomorrow. This will happen over a long-term period.
What kind of impact raw material prices had on the Q3 FY23 performance of the company? And how has been the key commodity prices behaved in the last quarter? And what Minda as a company is doing to negate the effect of fluctuating raw material prices?
So I'll give you an answer one by one in terms of copper, zinc, tin, lead, aluminium, nickel if you want. but I'll focus on the products that impact us the most. If you look at copper, which impacts us a lot, on year-on-year, they have gone 10%, but on year-on-year, they have increased by 3%. Aluminium has gone down year-on-year by 16% and quarter-on-quarter by 1%. So if you look at the graph which is published by Aluminium and other websites, year-on-year they have decreased, but they are still higher than compared to last year. And on quarter-on-quarter, they started stabilizing. So there are various initiatives that we do from the front end and back end. From the front end side, of course, there are from the customers, we have arrangements on most of our products, commodities for the back-to-back arrangements, which are paid over 3 to 6 months. And from the external side as well, with the suppliers, we have created some strategic alliances on how we can mitigate these ups and downs.
Thank you, sir, for answering all the questions. Thanks a lot.
Thank you.
Thank you. We have the next question from the line of Harish Shah from HS Investments. Please go ahead. Mr. Harish Shah, your line has been unmuted. Please proceed with your question. As there is no response from this line, we will move to the next question from the line of Bismit Nayak from RW Advisors. Please go ahead.
Yes, sir. One question from my side. This premiumization that we talk about, can you quantify it in any way as to what percentage of revenue used to come in FY21, 22, and 9-month FY23?
See, typically our kit value has been increasing by 20 to 30% year on year due to the premiumization. Let's say in two-wheeler, if we used to offer 100 rupee product, it is now about 120. Then the year after that's about 140 or 150. So this is typically about between 1.2 to 1.3x is typically of all our product lines that goes year on year.
Okay. And if I heard it correctly, 20 to 30% of our components are indigenous. This is pertaining to wiring harness only, right?
Yes, it is about 10 to 12%, not 20 to 30.
Okay, 10 to 12%. On a group level, you are talking about, or wiring harness?
We are primarily talking about wiring harness division because that is the significant material in-house manufacturing.
Okay, so this is supposed to go to what percentage in the next 6 to 8 quarters?
As I mentioned, it is supposed to go to about 40 to 50% in the next 6 to 8 quarters, depending on various initiatives and approval from the customers.
That's right. Understood, sir. Thank you.
Thank you.
Thank you. We will move to the next question from the line of Harish Shah from HS Investments. Please go ahead.
Thanks for the opportunity. Just wanted to know the division-wise capacity utilization about the company. How are the CapEx plans lined up? And if you can share the cost of debt at the console level for the current quarter.
Sorry, there are multiple questions. I'll go one by one. I already answered the question on the capacity utilization. They are different across different segments and different plants and divisions. Security do 5%. Wiring harness is about 75%. Die casting is about 85 to 90%. And electronics are about 35%.
These are for current quarters or the 9 months?
They are for the current quarter and largely they remain the same over the 9 months.
Okay. Okay. And how about the CapEx plans?
So typically, CapEx is about 4 to 5% of our top line. About 2 to 3% goes in our technology and R&D. About 1.5 to 2% goes in future investments in future technologies and future CapExes for growth. And about 1 to 1.5% is on the regular maintenance CapEx.
Okay. And my last question is, what will be the cost of debt at the console level during the current quarter?
So I'll ask our CFO Vinod to answer this.
Yes. So at console level, the cost of debt would be in the range of about 7.5% for the quarter.
Okay. Thanks, and I wish you all the best.
Thank you.
Thank you. We have the next question from the line of Naveen Mata from Mahindra Manulife. Please go ahead.
Yeah, hi. Thanks for the opportunity. A couple of questions. One was, if I look at our CV segment revenues this quarter and compare it to the second quarter, there is a slight decline. Whilst we've seen, improvement in production growth for CVs, so I was just trying to understand why would that be the case?
No, Naveen, the quarter 3, quarter 2 is almost same at about 29.3%.
I'm talking about the absolute revenue that is down, and let's say production growth for at least MHCV is up by 10%. So just trying to understand if it is, a specific model or specific customer where we would have.
Quarter on quarter, the industry has gone down by 6%, and our segment-wise revenue is almost the same. So
you would be including LCV in this?
No, this is only purely CVs.
MHCV.
Correct.
Okay.
All CVs.
Including tractors. Okay, got it. And secondly, sir, if I just kind of normalize that impact of 30 crores in the second quarter, I'm just trying to understand if, margins, if you compare to 2Q, ideally it would be lower this quarter by almost 30-40 basis points if I kind of make that adjustment. So have we kind of seen a mix effect or, it's commodity in this quarter?
Yes, so I'll ask Vinod to answer this question, please, Naveen.
Yeah. First of all, we need to see the margins till the time those are moving in a narrow range of 30 basis points here or there. Honestly, this won't be a cause of concern. There are many moving parts actually, so far as auto and business is concerned. One is the impact of commodity prices, which we pass to after a lag. Many a time there are delays in receipt of revised prices from customers. So to this extent, there are sort of variations, but those need to be within a band which should not sort of impact the overall trend actually. Beyond this, there is nothing.
Sir, I'm trying to understand this in the context of ideally you should have, seen some benefit of the lower commodity cost and also pass through. So in that context, ideally we should have seen a margin expansion, but we've seen a contraction. So some of it is understood by the operating negative leverage, but I was just trying to understand directionally, is it commodity or is it purely mixed in small ways?
Yes, if we really closely look at the commodity prices, actually in Q3 there was slight upward vis-a-vis Q2. While of course, if I compare it with say Q1 or Q4 of last year, there of course has been decline. So it needs to be seen in that perspective.
Okay, and just to kind of understand whether all the commodity benefit, the fall that we've seen in the last couple of quarters, is that well reflected in this quarter, or you would assume that some more pass-throughs should come about?
No, it has completely been sort of incorporated actually.
It's incorporated.
I don't think that on account of pass-throughs, it should have any sort of adverse impact on our margin at all.
No, sorry, I was actually asking whether it should have a positive effect if we have pass-through and commodity costs have also come down. Should we see a benefit on account of that on our gross margins?
Yeah, so Naveen, yes, again, primarily, as I mentioned, quarter on quarter, either they have gone up or gone down by 0.1% or 1% or 2%. There's not much of a difference in the commodity lag per se. Of course, exports do take some time, when in terms of the payment terms and all that. So that is a little positive side that we may see in future. But again, depends on the large sale that happens.
Got it, sir. Got it. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, we will now close the question queue, and that was the last question. I would like to hand the conference over to Mr. Akash Minda for closing comments. Please go ahead.
Thank you, sir, everybody, for joining once again. Again, our focus is to deliver consistently and sustainably, and we've been doing for the last 10 quarters. And I would like to reiterate that we've done a closing of about a revenue of about 1,068 crores with a 10.7% EBITDA. One of the important factors going forward are electric vehicle mobility. more products per customer, more customer per products, focusing on technology as well as operational excellence going forward. These are our core areas of focus going forward. Thank you very much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.